All right, I've welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on CarnivoreTrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So markets this week, getting above that all-important 5K number. As you can see, the SPX here is currently sitting just under 50.30 as we're about an hour from the close on Friday afternoon here. And obviously, we talked about this psychological level. Did they want to get up there? We had a big thrust last Friday. Monday, Tuesday, kind of just a pause candle, setting up a base, and then up Wednesday, pause yesterday, and then up again today. So really light week news-wise. We had some Fed speakers out there. We did have some bond auctions that went fairly well, though we'll get into that in a little bit here. But again, very light on the news side this week. Next week is going to be a little different, though. We do have CPI and PPI, obviously. It's also Options X for February. So again, I generally want to give the market kind of the upside bias into those kind of time periods, into an Options X. Generally, the market makers, institutions want to keep control of the market, never want to let it get too out of control to one side or the other. It's usually kind of a neutral week. So again, we'll give the markets the upside bias. And the bottom line is the market can go higher until you get a high volume sell and you get follow through on that. So we did get through the psychological level. Does that what we need to get a sell off here? It's certainly possible. There are a few things that are getting a little strange here, or at least a little obviously I've talked about Euphoria in the tech sector. And you're going to see here the call skew on not even Mag 7 anymore because Tesla's gone out of the Mag 7, but call skew in Mag 6. It's now reaching that kind of 0.03, 0.02 area. If you're not familiar with that, what this means is essentially the premium paid for call options is extremely skewed, obviously, to the upside. And, every time it gets up to this area, we do tend to see pretty good pullbacks. Even here, pretty shallow. This one led to a much bigger decline. That was the huge decline in 2022. This one didn't quite get up there, but, it did lead to a pullback. We got up here, little minor pullback, and then we put in a higher high. And then you can see we had the October dump. And then notice the correlation there hitting the lows, call skew at the same time. And now we're kind of reaching those highs. So some things to watch for. But I mean, what an incredible move here to kind of take a bigger picture view. I mean, this is 100% a historic rally. So if we look at 2021, right here, this is that green year, where we had ZERP and 120 billion a month in QE. We had about 1,000-point move in 12 months. We've had a 1,000-point move in the last 4 months with 4 to 5% interest rates and quote-unquote quantitative tightening. So this has been a remarkable move here. For the markets, it's definitely a historic rally. Taking a look here, 4,100, and we're basically knocking on the door of 5,100 right now. So a 900-point to 1,000-point move in not even really 4 full months versus it literally took us a whole year to do that in 2021 when we had massive stimulus being pumped into the market, into the economy. That's probably what's happening now. They're just not saying that, right? Financial conditions are loosening. Even Powell admitted that a week ago. But that is the nature of the market. We did get by the way, I thought this was comical. We did CPI revision this morning, and I guess it went down. So 0.1%. I don't know about you, but I just got my insurance bill this morning, and it went up another 8% after increasing about 45% a few months ago. So you guys can tell me, make sure you let me know in the comments how much your grocery bill has fallen. Let me know how much your mortgage has gone down, and let me know how much everything else, how much cheaper your insurance and everything else has gotten, because I'm excited to hear those statistics. But anyways, as far as this market is concerned, again, going into Opex week, again, we'll be neutral to upside if we get high volume selling. There's signs here, right? SMCI, these Euphoria names, NVIDIA, heck, even AMD, although that's kind of backed off a little bit. ARM reported earnings this week, 50% move in one day, totally normal. NVIDIA is now, by the way, has a larger market cap than the entire Chinese stock market. I'm not making that up. So I wish I was, but And again, they had but like half a trillion in market cap in the last month. So anyway, but that's kind of the situation that we're in right now. Again, triple Qs here can go a little bit higher. I would just keep an eye on this. Maybe have a little rising wedge. It's not the best, but it's definitely getting in there. I did have a short-term target of around 442. We got through that resistance level I talked about. Again, it was not a short level, 433.75. So we're through that. The next level I think I told you was 442, and that kind of coincides with that wedge target. So just watch that. On the downside, 430 is your short-term, immediate short-term support. You got this pivot low, and then this is kind of your big level here, 413, and then 408.71. This pocket right here would be much more major. It also lines up with that 50-day moving average, as you can see there as well. IWM here breaking out of a little wedge. So small caps finally seeing a little bit of rotation. We also saw ARKK. So Kathy, again, I like to use this as a growth stock gauge. That up nicely the last 2 days, actually up nicely this week. So some of the small caps, some of the growth names actually catching up. A lot of the time before a top gets put in place, you get a breadth thrust. We're not quite seeing that, but breadth is a little bit better. Something to keep an eye on. If mega cap tech sells off, though, and these small cap names hold up, it could be a sign that this is just rotation. Now, if mega cap tech really sells off, it's going to take the market down. I don't care what IWM does. But what we would look for is at some point higher lows. Whether that's weekly, monthly, whatever. But it's not a bad sign to see the IWM break out of this little wedge. The short-term resistance at 200 still, and then 205 is your next big level. The diamond here actually fractionally lower today, but nothing terrible. Who cares? It's the Dow. It's price cap weighted. It's not a big deal. Still can get to 390, so we'll leave it that. Leave that there for now. SMH here. We talked about the 200 handle. We are through that, so that is continuing higher. Max Euphoria here. Just insane euphoria in the semiconductors. Just be careful here. If you have gains in these, trail your stop, please. IGV, that's continuing higher, although this is much less extended. This is still, look, that's going to gun for double top. They'll probably get there next week. So 448.79 is your official all-time high double top. We'll see if the IGV can get there. I don't see why it wouldn't. You get a gap up Monday, we could go up there pretty easily. But IGV has had an amazing run. I still think this is much healthier than the semiconductors. Still, overbought, but it's much healthier. But we'll give it the upside bias to that double top area. The Dow transports you're holding up as well. And again, nice weekly pattern. So this is one chart I do like. As far as, maybe playing catch up or not being as, euphoric or ridiculously overbought. This is a chart that you're going to see rotation in, and it's got the pattern. Nice weekly inside bar, and it never broke down. We spiked the low, but we never closed below it. And it's inching up. So weekly, we can get back up here, and then there's your inverse head and shoulder pattern that still is valid, right? Sometimes it takes time, but it's still valid up to about 16.9, and we'll just call it at 17K. We'll call it even there. All right, so I want to talk interest rates here because we had, and here's the 2-year. This actually triggered an inverse head and shoulders today, or I should say today, this week, Monday, and it's still in play to 470. I don't think the market would like that, but again, the market's been able to defy gravity. But we'll see. We'll see how the truth will come if that pattern plays out. 5-year inching higher as well. That got down to the yellow line. Remember. 10s and 30s also inching higher as well, right into resistance here. But we have higher lows now, and I do think these are going to break out here shortly, as I've been basically repeating myself over and over saying that that's going to happen. One thing here. So this week, bond yields, Wednesday, Thursday, we had 10s and 30s auctioned. Both auctions were good. And let me show you the price action. I'll just use TLT because it's easier to see in an intraday basis. TLT got a spike, right? So this is inverse yields, obviously. We got a spike, and it came right back in. Yesterday, Thursday, we got a big spike, and it came right back in. Today, CPI was revised. I'll show you the bond futures right here. This morning, big spike, and we're lower. So bonds are not acting well right now. You're getting bullish news out of bonds, and they cannot hold bids. That's not a good sign. For bonds. It's not bullish price action. When you get positive news and you fade that rip 3 days in a row, not a good sign. I am expecting yields to climb. 10-year, look for 433. That's your next stop. There's a little pivot just below it at 4, we'll just say 4.3. 30-year, if you get through this, it's up to 4.6. 5s, we're looking for 4.3, 4.4, and then 2s, like I just said, 4.6 to 4.7. So I think yields are firming up here, and we'll see how much longer the market likes it or can tolerate it. But that is bullish price action for yields right now. XHB, new all-time highs again. So again, we talked about how it wasn't ready to break out. It consolidated for a few more weeks, and it is breaking out now. I still would feel better if this 20 MA was up here, kind of like closer to 90. But so just saying that it might not this breakout might not last. Again, the trend is up, so we have to respect it. But I'm just saying I would have preferred it if the 20 MA caught up a little bit more. Because a lot of the time you can get a kind of a fake out when you're not ready, or you try to break out before you've done enough consolidation on the bigger time frames. But right now the trend is up, and home builders are just absolute powerhouse. VNQ, so real estate going to hold up here into the end of the week. This was a big level, so 83.24. We are going to close above that. So they're saving VNQ, and this pattern is still technically good. If we close below 83.24 on a weekly, this is going to drop pretty fast, I would imagine. But right now, it's holding up. XLF, flat to positive on the week. Let's not make too much out of that. That can still go a little bit higher, but just kind of sideways for the most part here. KRE is the problem. So KRE, obviously NYCB was a big deal. I guess I shouldn't even say that because the market does not even care right now. And it's according to everyone, it's isolated. So where have we heard that before? But hey, who cares, right? Just buy SMCI. But if the KRE here, from a technical basis, this white line is right here, 48.29. That's the low of that green bar. We're going to close below that. So that is a negative. That means we lost that bullish inside bar pattern. Again, you do have a lot of support in this area. So it doesn't mean it's going to go down in a straight line, but that's not a good sign when you see that. So definitely a sign of weakness. Looks like the KBE is going to get saved on the weekly. But definitely regionals under some pressure here. Mainly, obviously, NYCB doing a lot of that legwork. But again, it doesn't matter. Who cares? Anyway, broker dealers here holding up okay. On the weekly, they're really just fine here. I still think they back off at some point, but good weekly pattern. Onto commodities here. So crude is just, I didn't even know what to say with crude right now. We held the trend line. We talked about this last week. I said we probably bounce here. We did. And yesterday we had a pretty good thrust. I mean, I did not think we would retrace this much through 75 this easily, but we have. Now we're back to the 200. Now it's all about pattern with crude. If this can consolidate this little move here, it can punch back up to the, the 80 handle, maybe 81.50. If it rolls back over, I don't think this trend line holds, and I think we might see lower prices. I don't know how long that will last. I think there's definitely higher floors in crude for the most part. The positive for crude right now is, like I've been saying, yields are firm. If they continue firm, it's probably going to be a tailwind. Another positive for crude right now, and I've talked about this very publicly, is FXI. So if China can firm up and put in a bottom, which it may be doing, that would be obviously a positive for crude as well. So I'm watching those. Another thing I'm watching for is, like as I said last week, if China can firm up, I think you get some of that panic bid in tech to kind of subside. But we'll see if and when that happens. But I'm watching FXI. It is green today. XLE, nothing wrong with this. It did back off at 85. I think we talked about that level. But this is just consolidation. That's fine. We had a good move off the lows. Nice green bar. I don't really see anything terrible about it. The weekly is kind of neutral. The daily is kind of neutral as well, but you could make a little zigzag higher here. I don't really see any problems. XOP, same kind of thing, although you don't want a lower low from this pivot. That would be weak. OIH, again, this could still roll over and go a little bit lower. That's really all I've got penciled in. I think this is a very good level down here for the oil services. Uranium here backing off pretty nicely. So finally, take a look. Higher high. What's this? Lower low. That's the first time we've had that since the breakout, essentially. We had a minor one right here. But CCJ has never had that. And it's also visible on the weekly. Now you're still above 42.17, this pivot high, this green bar, all this stuff. You're still above the 20-week moving average, but it is a noticeable change in character. So maybe it's finally ready to back off. Knowing how this trades in a week, it'll prove me wrong and go up to 52.50. But again, definitely a little change of character. We'll just make note of that. URNM down 22 cents today. This pattern on the weekly is still fine. And the daily is still fine until proven otherwise. All right, net gas coming in as well, down to $1.85. This is, you got to go back to COVID to the last time we were this low. I do think nat gas is attractive down here. I just don't really have a buy signal on it. I know there's lots of negative press right now. Biden shutting down Freeport, or partially shutting down LNG exports. Freeport's partially shut down. There's lots of negativity right now, but you got to go back to, again, basically COVID, when the world was shutting down. The whole world was shut down to get nat gas prices this low. So I do think it's attractive. I just don't have a buy signal on it. I am looking for one though. I do think it's wildly cheap here, but we'll see how it plays out in the next week. Again, it does look way overdone, and when this bounces, it can bounce 30-40% in a week. So we'll see how that plays out. I do think it comes up and fills this gap here before too long. Also, seasonally, nat gas tends to bounce between February, March. If you go to last year, even there was the late Feb bounce, and then the bottom was kind of put in March, and then a little double, triple bottom there in April, and then that was kind of the low. So seasonally, buying tends to pick up around just before the springtime for that summer kind of heating season, or cooling season rather. But it is lower this week anyway. Dollar index here, again, continuing off of that big bid from last Friday and just sideways. If this stays firm and that 20 MA catches up, this is going higher. So just respect the dollar. It's got a lot of resistance at 105 and 106, a ton, but this pattern here suggests a move to 107 if it plays out. If we fail back below 103.50, then I think it's in a lot of trouble. I think the dollar's in a lot of trouble if that happens, because you've got lower highs here. And you don't want to come back down near this pivot here. That would be a weak look. But right now it's holding up. Gold here backing off a little bit this week with the strong dollar. Makes sense, but it's still holding up really well. I'm really curious to see how this plays out if yields start to push. If the 10-year pushes through 4.2, which it's really close to right now, I'm really curious to see how gold performs. There's going to be a time, I think, in the future where gold and yields go up together. I don't think we're quite there yet, but at some point I think that will be a thing. But right now, gold backing off, and it should perform inverse to yields still. It is lower again. We talked about 2075. I said that'd be resistance. It was, and it's backing off. But really no problems here on the bigger time frames for gold futures. Silver got a pretty good bounce yesterday, trying really hard for a higher low here. I still don't love the pattern, but I think it needs to go lower essentially. But I think if it does, just buy. So I'm looking for a buying opportunity in precious metals in Q1. As you guys know, same thing with platinum. That's still inching lower, but I do like this level long term, just this whole area. Same thing with palladium. That did inch lower as well. I really like this area as well. I don't really see much more downside. You see a pretty good RSI divergence there on the daily, and it's also visible on the weekly as well. So some seller exhaustion coming into play there. Copper, interesting price action here. So that is triggered a head and shoulder pattern here. So that may get down to 348 if that pattern plays out. If we get back above this white line, I can put it on there correctly. No, I guess I can't. Just trying to extend it. There we go. We close back above this white line, then that's a negated pattern. It doesn't mean it can't go lower, but we wouldn't expect that pattern to play out. But it did trigger there. So just be careful with copper here. It may head down. All right. Lastly, Bitcoin. You know what have I been banging my fist on the table saying? Everybody got bearish here at the 39 Pierce, and I said just watch the weekly close. And we never close below that green bar. Test candle, power move. Power weekly bar for Bitcoin. I do think there's some resistance up here still, though. I don't think it's quite ready to bust through this. Maybe it gets to 50K. I think that would be a little pullback there. But it's acting well. ETH also bidding up, weekly pattern looks fine. I don't see any issues here. Kind of my favorites right now: Solana, Cardano, Matic still acting well, but Bitcoin's fine, and it never gave me a weekly sell signal. And up move, little bull flag, boom, big pop. It is pulling back right off of where, right there, that blue line, pivot high, and that's where we're getting a little pullback here today. But I think maybe it gets to 50K and then maybe has to pull back. But this is fine here. There's no problems with Bitcoin right now, and I would give it the upside bias. All right, so markets again, just pulling back off the highs a little bit. That let's not make too much out of that. That's just day trading profits and stuff like that at this point. So we're going to close above 5K. We'll see if that's enough to get everybody on the bull train here. I know CNBC is going to be cheerleading, this weekend. We'll see if that does the trick. Again, lots of things here. Euphoria. Just be careful in this environment. But again, until we get high volume selling, and obviously subsequent follow through, lower highs, that type of thing, the market can still go higher. When blow off tops happen, they tend to go higher than people think. So just be aware of that. So, anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.